Bismillahirrahmanirrahim. Hello everyone, welcome back to the another video. Today in this video, we are going to solve the problem which is related to retirement of a partner. In previous video, we have already discussed all the cases of retirement of a partner. Now with the help of this problem, first of all, we will learn the general part. Then after in next video, we will learn the leisure portion of this topic. Okay, see here are three partners, Chetan, Ayush and Sudha were partners in a firm sharing profits and losses in the ratio of 5:3:2. We will write here in short form C, A and S are partner sharing profits losses in the ratio of 5:3:2. On 31st March 2019, their balance sheet was as follows. Here the balance sheet of previous year is given. Capital 90,000, 60,000 and 40,000. Provident fund 30,000, general reserve 20,000 and creditors 10,000. In asset side, plant and machinery, furniture, stock, debtors, provision for doubtful debts, cash at bank. Now, who is retiring from the business? Chetan retired on the above date and it was agreed that this partner is retiring from the business. Chetan. What was the agreement here for the retirement? Debtors of 5,000 were to be written off bad debts. Okay, 5,000 bad debts written off and a provision of 5% on debtors for bad debt and doubtful debts was to be created. Here the debtors amount of 5,000 has been bad debts. Now we have to create a new provision also for doubtful debts. Next, goodwill of the firm on Chetan's retirement was valued at how much? 1 lakh, and Chetan's share of the same will be adjusted by debiting the capital account of Ayush and Sudha. Okay, the stock was revalued at how much? 36,000. Furniture was undervalued how much? 9,000. Liability for workmen compensation reserve of how much? 2,000 was to be created, and at last Chetan was to be paid 20,000 by check and the balance was to be transferred to his loan account. We have to pass the necessary journal entries in the books of the firm on Chetan's retirement. Here first of all, we will make the journal entry for bad debts. For bad debts, date is not mentioned here. So in date column, we will write the serial number. As we know that bad debts is just like an expense or loss for the business. So if there is any expense or loss will be given, we have to make an entry that bad debts account debit to sundry debtors account. So first entry we will pass here. Bad debts account debit to sundry debtors account. How much the amount was? 5,000. In next entry, what we have to do, we have already created provision of how much? 5,000. Now we have to make the adjustment entry of this bad debts account with provision for doubtful debts account. So here what you will do, you have to make an entry which is provision for doubtful debts account debit to bad debts account. For the same amount 5,000. Here your bad debts account has been adjusted. Now you have to create the new provision. First of all, you have to deduct this bad debts amount from the debtors. Your debtors balance is how much? 60,000. Out of 60,000, 5,000 has been bad debts. Then 5,000 you have to deduct here. 55,000 is your debtor balance. Because 5,000 we have already created provision and this bad debts amount will be adjusted from the provision amount. Debtors balance will be how much? 55,000. Out of this 55,000, you have to create a provision of 5%, which is new provision. how much would be the amount here? 2750 will be the new provision amount, and this new provision will also increase the liability. Now what we have to do, we have to go through the revaluation part, and we have to make an entry for increase in asset or decrease in asset, for increase in liability or decrease in liability, like this. So first of all, we will do the debit part of the revaluation, and then after we will do the credit part of the revaluation. Here the provision for doubtful debts will be created. It means revaluation account debit to provision for doubtful debts. This entry will be here. Second, the liability is creating here workman compensation reserve. A liability for workman compensation of rupees 2000 was to be created. This one is also increasing the liability. So we will write here, we will make an entry which will be here, revaluation account debit, revaluation account debit to provision for doubtful debts account to workmen compensation claim account. 2750 was the provision for doubtful debts, and the workmen compensation was created. How much? 2000 was the workmen compensation. It means 4750 is the revaluation account debit balance. Here you can write narration also, being value of liability increases. Next entry we will pass here for increase in asset. A stock was revalued at 36,000. See here, stock value is how much? 30,000. It means 6,000. The value of a stock is increasing. Furniture was undervalued by 9,000. It means in previous balance sheet you had written 9,000 less the value of furniture. Now you will have to add this balance also. So we will make an entry for this also. We have to make an entry which is a stock account debit, furniture account debit, to revaluation account. How much the stock value? Stock value was 6,000, and the furniture value was how much? 9,000, and total value would be here 15,000. See here, the revaluation debit balance is how much? 4,750, and the revaluation credit balance is how much? 15,000. Now what we have to do? Credit balance is more than the debit balance, and if the credit balance is more than the debit balance, it means we are getting profit at the time of revaluation of asset and reassessment of liabilities. Now we have to minus this balance from credit balance to debit balance, and the balance amount will be credited to the partners in old profit sharing ratio. Okay, see here, next entry we will pass here, a revaluation account debit to all partners capital account. Means those partners who are retiring and those who will be continue their business, all these partners, this profit will be credited to C's capital account, to A's capital account, and to S capital account. 15,000 minus 4,750, it means 10,250 would be the revaluation balance. Now we have to distribute this profit in the given ratio. 10,250 divided by 532 means 10. 5,125, 5,125, and next 3 upon 10, 1075, and 10,250, 2 upon 10. This would be their share of profit. Now what we have to do, we have to make the entry for the treatment of goodwill. The firm goodwill was valued at how much? 1 lakh. This was the firm goodwill value. Now we have to see here that how much the share of Chetan's goodwill will be. The Chetan's goodwill share will be 5 upon 10. It means 50,000 their share of goodwill. Now we have to adjust this goodwill value in gaining ratio. And as we know that if any partner will retire from the business and nothing is mentioned about their profit sharing ratio, it means the new profit sharing ratio would be here 3:2. And this new profit sharing ratio will also be the gaining ratio. So here we will not calculate gaining ratio by using formula. So here gaining ratio would be 3:2. We have to adjust this goodwill in 3:2. Now what entry you will pass here for the adjustment of goodwill? For the adjustment of goodwill, you have to make an entry which is gaining partners capital account debit to retiring partners capital account. And who are the gaining partners here? A's capital account debit, S capital account debit, to retiring partner. Who is retiring here? C's capital account. The value of goodwill was how much? 50,000. And their profit sharing ratio was, and the new ratio was 3:2. It means 30,000 and 20,000. This will be the adjustment of goodwill. Reserve is given, then we have to make an entry for reserve also. Here general reserve is given how much? 20,000. So we have to make an entry for general reserve also. We will write here general reserve account debit to C's capital account to A's capital account to S capital account. The value of general reserve was how much? 20,000. We will write here 20,000. In which profit sharing ratio? Old profit sharing ratio. Old profit sharing ratio was 5:3:2. It means here 10,000 and here 6,000 and here 4,000. Now what we have to do? We have to calculate the total capital of the retiring partner. Then after we will make the journal entry. It means we have to calculate the C's capital. How much would be the value of their total capital that they will withdraw? Chetan capital was how much? 90,000. First of all, we will write here 90,000 plus here revaluation profit is also how much? 5,125 plus 5,125 plus 50,000 their profit share of goodwill plus 10,000 their reserve amount. 1,55,125 would be the total amount that the retiring partner will take from the business. So we will make an entry here. This capital account debit to bank account to seize loan account 155,125. How much amount they are paying by check? 20,000 they are paying through check, and the remaining we have to transfer into the loan account 20,000. It means the remaining balance would be how much? 1,35,125 would be the remaining balance. This will be transferred to the loan account. Here, why we will transfer this balance in the loan account? Remember the point that if any partner will retire from the business, and their retiring amount, if business will keep themselves, then the business will consider this partner as a creditor. It means in past the business maybe had taken loan from this person, so this amount is to be transferred into the partner's loan account. This is the concept of partner loan account. So this is all about the general part of this topic. In next video we will do the ledger portion of this chapter.